Hey guys, I'm Hunter Floyd with Team Chase Keller Williams, sitting down with John Pettit with United Lending. John, thank you for being here today. We really just want to provide value for those out there looking for options, looking for help. So appreciate you coming by. Can you tell us a little bit about yourself?
Yeah, so I'm John Pettit with United Direct Lending. I've been in the business about 25 years here in the Tampa Bay area and done a lot of group work with Brad and his team over the years.
Perfect. Well, let's get started. John, I was renting a home or owning a home, then Hurricane Milton or Hurricane Helene came in, destroyed the property I'm living in, and now it's not livable. What are my options out there during this devastating time?
Yeah, so fantastic property that's available now through FHA. It's called the FHA-H, standing for hurricane. And basically, if you can prove that you're in a government-declared disaster area after the hurricanes, you're eligible for this product. And it's 100% financing on the purchase of a new home, or you can use it to renovate. If you own a home and that was destroyed, you can use it to renovate that home as well. Now, that one's not 100%, it's the regular FHA 96.5, but you can purchase a home with this product at 100%, no money down, and they're very lenient with a couple things. One is credit. If your credit's been damaged as a result of the storm, basically, and by the way, you've got 1 year to start this loan after the incident happened. So let's say you're 3 months down the line, and as a result of the storm, you've missed some bills and whatnot, they will look at that leniently as long as you can prove that your credit was good prior to the disaster and it was due to this disaster. They will take that into consideration. So they're very lenient, more lenient than a normal FHA loan, and of course 100%.
Yeah, and John, for the viewers out there, I'm listening to this, it sounds almost too good to be true. You're telling me, heck, I can get 100% financing when I was renting. I mean, what's hidden there that?
Well, nothing hidden. I mean, you still got to qualify, right? I mean, if you were renting, that may have meant that you're having trouble qualifying. It's going to be the same thing. If you can't qualify based on income, that's still going to be a problem.
Yeah.
You're not going to be able to alleviate that. But for folks that can qualify on income, like I said, they'll be lenient on credit if that was damaged and things like that, and it's no money down. So they're just making an effort to really try to put their arms around this and help folks that don't have any other options. But they're not going to do something crazy. You still got to qualify based on income.
Yeah, right. I mean, it's an incredible opportunity. You mentioned, okay, I'm someone viewing this video right now. That may be me. What initial steps are you advising to take? I mean, do you reach out to yourself first? What do you advise in this situation?
Yeah, I would definitely contact a lender and have them look at your situation and analyze whether you can qualify or not, how much you can qualify for, and then at least you know your options. You're like, okay, I can get this much house. You start looking at what types of houses are available for that, see if that's something that'll work for you.
Yeah.
And by the way, this house can be in any area. It doesn't have to be, within a certain proximity of the house that you're in now or the rental that you're in now. It can be anywhere.
And that was a question I had, listening to you. I'm hearing a lot of people, they were either in a flood zone or not and had damage, and they might not want to live in Florida now.
Right.
Are you able to take this program and move out of Florida, or is this Florida specific? You have to move into another Florida residency?
No, there's no restrictions geographically. As long as you qualify for the program, you're able to take advantage of it, and you can, if you decided, hey, I'm done with Florida, you can make that choice and you'd be eligible for it as long as you qualify.
Wow.
We're going to talk a little bit about the 203H program from FHA.
John, another question that I'm hearing a lot is I have clients, you're hearing people, they had an existing mortgage on their property, and unfortunately their property was devastated with one of the hurricanes, and they have to deal with that problem, but they want to sell. I mean, what options do they have? That's
a great question. This 203H product that we've been talking about makes allowances for that exact situation. So let's say you have a house, you own a house, you've got a mortgage on it, and then that house is destroyed and is unlivable. Well, you're thinking, well, I got to get this resolved and I got to figure out what my insurance money is and all that before I can move on. Not necessarily the case. You can go ahead and purchase a new home, and if you can basically display two things, One is that you are working with your mortgage company actively to figure out what they're going to do with that mortgage. If they're going to forgive a portion of it, how that's going to be taken care of. You at least have to be down the road and speaking with your mortgage company about mitigating that situation. And then also you have to show that your insurance money is going to be going towards that mortgage payoff on the first. As long as you can show those two things, you can buy this new house and the lender is not even going to have to count that payment against your debt to income ratio,
Wow.
which is going to be as if you sold it, right? So you're not going to have to, when you go out and find out what you get qualified for, you don't have to have that payment stand in your way. It's as if it's not there. So you can go ahead and start that process, find the house you're going to live in while you're working on this stuff to take care of that old mortgage. So it really, they've really gone a long way to try to think of every scenario and try to help folks out there.
Yeah, a lot of opportunity out there, and I think it starts off by asking the right questions, not only with an expert like yourself who's been in this business for a very long time and experience, but also, like you had mentioned too, your lender, who are talking to them as well, and an expert like myself. So John, you look at the inventory on market, off market, there's a lot of opportunities out there, unfortunately, and fortunately for some, whether beachfront opportunities in flood zones, not in flood zones, there's properties out there that have been damaged, and these sellers want to move. I'm a buyer, I'm interested in purchasing a damaged property from one of these hurricanes, whether it be for an investment property or primary property. What kind of options do I have on the buying side?
So if it's going to be your primary residence, the 203K, FHA 203K is probably going to give you your best bang for your buck. If you're an investor, you can use the conventional route, which Fannie Mae has what's called home style renovation. And that's an option that's similar to the 203K. So basically, with both of these programs, what you're looking for is an opportunity to enhance the value of the property significantly, right? And if you can do that with the work that you're going to do, then you're most likely going to be able to finance 100% of the work that you do. The way the program works is basically, let's say you're picking up the property for $150,000, maybe it's in really bad shape, and you got to do $120,000 worth of work. That's $270 total loan, right? So as long as that property, the subject to appraised value, which is going to be taking the plans of what you intend to do and then looking at it and saying, okay, an appraiser's going to say, okay, it's going to be worth this after we do X, Y, Z to it. As long as that property appraises for 5% more than that $270 that you've got to cover, then you're able to roll everything into that loan. So you've just got to be enhancing that value from the $150 that you're buying it for to roughly $280, $285, something like that. Which is very likely in these scenarios that we're seeing. If you're picking up properties that have water damage and things like that, you may be getting them at enough of a discount that all you have to do is bring it back up to snuff, and there's your spread, right? Or certainly opportunities you look for, adding an extra bedroom, adding an extra bathroom, things like that, immediately give you an extra maybe $30,000, $40,000,
right.
And there's your spread that you need. So that's kind of the way that those products work. And yeah, excellent opportunity, and lots of opportunities out there right now to do that and to help both sides. I mean, the seller's looking for a solution.
Yeah.
They're looking for somebody to come in and do that because they're not going to be able to list the home. So you're solving a problem for the seller, and then if you're an investor, you got a chance to make a little money for doing all that work and taking that risk.
And you mentioned having those plans set in stone. You can't just write on a napkin, hey, I'm going to do A, B, and C. How does someone go about, getting a general contractor to actually get the plan set and approved? Do you recommend having someone find a lender with already pre-approved builders on their side, or how does one go about that?
Well, that's a sticky one. You're going to have a tough time getting a lender to endorse builders because they'll get into trouble if they officially do that. But you just need to find a friend in the business, find a mortgage person, or usually your realtor. I mean, you guys would be a great research. You've got all kinds of lists of people that you know, like, and trust that you've worked with in the past that have done good work. So that's where I would start if I was somebody that's interested in doing something like this and I didn't know where to start. I mean, you can always Google, and that's going to solve everything, but it's going to take a little longer.
Yeah.
And if you're looking for a personal referral from folks that have actually used these people, then that's where I would start. I would start with getting a good realtor and saying, hey, this is what I'm looking to do. Can I talk to 2 or 3 different people? And then you price it out like anything else. You talk to 2 or 3, you say, this is what I'm looking to do. They all give you estimates. You go with the best one, the one you feel best about, and the best price. and then you move forward. And now you've got your plans that you give to the lender along with your purchase contract of what you're buying, and then they go do an appraisal based on that, and that's what dictates how much they're going to lend.
Yeah, I think that's spot on. You want a contractor that you can trust, is organized, and has proof of experience and concept. And Team Chase, myself, all of Team Chase, we have those resources for you and anybody you know. John, another scenario that we're hearing a lot of is clients have experienced damage with their properties, and although there's a lot of damage, they really want to stay. It's whether it be they love the area, the neighborhood, in the school zones, they really need to stay in their situation. What are their options as far as with the damage and moving forward?
So the 203H product allows for this scenario. You basically use the 203K in conjunction with the 203H. And for those of you that aren't aware of what the 203K is, that basically allows you to do improvements to the home or renovations to the home and build that into all one mortgage. So let's say, for instance, you're in your house, you decide we got to stay here, but we got $100,000 worth of work that has to be done because of the damage and so forth, and we owe $200,000. So you would have your $200,000 current mortgage, your $100,000 cost of renovations, that's $300,000. And now they're going to base what they lend on what the house appraises for, the after improvement value of it, right? Yeah. So all these things you're going to do to the house, what is it going to be worth after we do those improvements? They're going to establish that number by sending an appraiser out and looking at the plans of what you intend to do to the property. And then they're going to lend 96.5% of that number. So, a little bit sticky there. It could be sticky if you owe almost as much as what the house is worth. Yeah. Then you might run into a problem, because if you're not really enhancing the value, it could get sticky. But this would be more for folks that have been in their house for maybe 3 years or more. They've got some equity in there. Okay. And so then you could utilize this product and have a good chance of not having to have any cash outlay and being able to solve your problem.
John, I'm hearing these opportunities that you're stating, and you keep mentioning the property may need to be unlivable or deemed unlivable. Can you tell me a little bit more about what really does that mean?
Sure. So basically, you're looking for one of two things mainly, either an inspection report or an insurance claim that details what the damage is. And then the lender's going to be able to look at that and have a make sense analysis of it and say, okay, yeah, based on these things, we agree that this is unlivable. And they're going to be, once again, they're looking to help people, and they're looking to do loans. So they're going to be lenient on this. I heard of one anecdote where somebody was actually featured in a news article, and they used that as their proof to the lender that it was unlivable. Had some photos of the home and so forth in the news article and things like that. So that's just an example of, it's not necessarily just from the inspection or just from the homeowner's insurance claim, but those are kind of the main two things that you would use as your proof that that property is no longer livable.